Before we get to the rival economic theories here, let's talk about where we are in the economy generally. You have a note out right now talking about a precarious equilibrium in the economy. What makes that precarious?
Well, look, now I've been doing this 35 years now, and the U.S. economy, in my mind, is starting to look like an emerging market economy that, or every kind of emerging market blow up that I've seen in my career. And that is you have rise in asset prices. So in the U.S., stocks and housing, that is fueling consumption by the top 10 or 20% of households. Top 10 or 20% of households or account for more than 50% of U.S. consumption. Then below that, the rise in asset prices being fueled by a 7% to GDP budget deficit, biggest we've ever had when it's not a war, not a recession. And then the third leg of that is Janet Yellen has moved the quarterly refunding to much shorter term debt, which has had the effect of suppressing interest rates. So you've got, I call it the three-body problem after the Chinese science fiction book and the famous math problem. So we don't know which one of those could go first, but it's one of these that if the stock market were to go down, then it could create a gap in consumer spending.
So that does sound pretty perilous for investors. Yep. And given the fact we don't know which one will break, although you think one of them is likely to break at some point, what does an investor do? How do they position themselves for something breaking?
Well, I think investors should be ready for more volatility, which I also talked about in the note. I think gold's very interesting here. It's at an all-time high, I think, as we're speaking today. And I think just in general, everyone should do a gut check, make sure they're not too far out on the risk curve, because it's been a pretty good run.
So let's turn to the question of rival economic plans from Donald Trump, somebody whom you have known for a lot of years and talked to from time to time, and then Kamala Harris, somewhat new onto the scene, at least with respect to her economic plans. How does an investor really address those two alternatives? How do you macro invest around those two alternatives? Start with Kamala Harris.
Well, look, I think it's two competing visions. Michael Boskin had a very good editorial in the Wall Street Journal yesterday, and he said, we're not getting a lot of meat out of Kamala Harris's programs yet, but we can go back and look, and there are three different sources. What did she say in the 2020 campaign? What did Harris-Biden do? And then what has she said so far? So in the 2020 campaign, which she's running from, single-payer health care, lots of restrictions, big spending, stopping fracking,
which she has backed off of. She said she's thinking better now.
Well, I always think with a politician, it's where's your heart and where's your head. And I think in her heart, she still believes that. With Joe Biden, he campaigned as Scranton Joe and then broke hard left. And, we ended up with a great inflation. I think she is hard left. She's trying to, maybe constructive ambiguity. And, I think maybe that's why CNN and the Washington Post came out and chastised her over the policies she talked about in Raleigh on Friday, because she's supposed to keep the mask on past November 5th.
However we read it. What about things like housing? She's trying to address that. We do have a housing problem in this country, I think you'd agree. Yes. We do not have enough housing. We're not building enough housing. She has a plan, at least, to try to stimulate that.
Well, there was no plan to say how she's going to stimulate it. What she's going to stimulate is buying. We don't need more house buyers. We need more houses. And there was nothing for how that's going to happen.
But don't the markets react to that and say, if there are going to be more house buyers, we better start building some houses?
No, it just means prices are going to go up, costs are going to go up. Why don't there's no solution to the root cause. Why don't we have more housing now? Is it blue city? The zoning problems? Is it that we need some kind of nationalized regulatory, in terms of building codes? Is there an affordability problem? Because, I will tell you that a lot of the policies from Harris-Biden over the past 3.5 years have added to the cost of housing.
So let's turn to the other side of the aisle, if we could, to Donald Trump, something you know a fair amount about. A lot of criticism that his economic plans would actually be inflationary, particularly on the tariffs and curtailing employment from immigrants, curtailing immigration. Right. What do you respond?
Well, first, let's talk about curtailing immigration. So for the first time in my career, the left is actually admitting that immigration suppresses wages. For 35 years, we heard immigration does not suppress wages. Now, it seems like the only supply-side solution that Harris-Biden had in the past 3.5 years is more low-end workers.
But it did keep inflation down below where it otherwise would have been. Do you agree?
Well, in the Harris-Biden world, sure. Because they also constricted the heavy regulation, and they kept people out of the workplace. So, and then I actually don't think that they have a problem with low-end workers doing better. So, if low-end wages go up, and as you said, tariffs. Tariffs are a one-time price adjustment. It's not inflationary. You don't set off an inflationary spiral. It's what, like in the UK, they call it an administrative adjustment.
Provided you don't keep escalating them.
Providing you don't keep escalating them. Most of this would be aimed at China, and China seems to be, it's a subsidy model. So they're just pushing out the, all these products as an employment scheme. These companies aren't making much money, so if you just want to keep the employment going, and I also think, I've been thinking about this a lot. I think that tariffs can, in a way, be regarded as a kind of economic sanction without a sanction. So if you do not like Chinese economic policy, and they are forced labor, cheap financing, flooding the market with overproduction, you could do two things. You could put a sanction on them, or you could put a tariff. You could also do it. The Chinese have been suppressing their currency, so it's also an answer to currency manipulation. So, but at the end of the day, I do believe that Donald Trump has changed the conversation on tariffs because he's turned them into a negotiating tool. He says, we will drop ours if they drop yours. It's kind of free trade versus fair trade.
Let's talk about the Secretary of Treasury, because you've been critical of Janet Yellen in the past for being too political. One thing I think we're reasonably confident of, she will not be the Treasury Secretary a year from now. Are you confident that Donald Trump will not appoint someone as Treasury Secretary who, in fact, will be political?
Look, there's political and there's political. All cabinet positions are political appointees. Then there is what is appropriate, what is normal. For a cabinet official to step out and start talking about threats to democracy, for the Treasury Secretary to show up at a rally for a candidate who is not the president, highly inappropriate.
Finally, debt and deficit. You've said in the past you believe former President Trump is very concerned about that. How do we reconcile that with extension of the Tax Cuts and Jobs Act?
Well, I think that there's a lot of demand, especially in the Republican House, for pay-fors. So as it stands, the Tax Cut and Job Act CBO scoring, which is never right, is saying that at a full extension, ceteris paribus would be $4.5 trillion over 10 years. Doesn't take into account any more growth. That the Republican House, has already identified at least half of that in pay-fors. A lot of it would be turning off this IRA, which is a doomsday machine on the deficit. It was originally scored at a plus 50 billion, and it's if it's allowed to continue to its final denouement would probably be over $4.5 trillion. Empowering states on the health care. maybe some tariff income.
So why don't we hear from former President Trump what you just said, which is, I will not have an extension of the TCJA unless we have pay for it? That might reassure the markets to some extent if we were confident of that.
Well, there might be some of his advisors who are advising him to say that. Because, I do think this debt and deficit is going to be one of the big issues of the day. I think Americans are worried about it. And, when we go back and look, prices have jumped to a high level. Very good chance, no matter what Vice President Harris wants to do, very hard to get grocery prices down from that level. But things you can get down are house payments, auto payments, credit card payments, and you could do that by getting interest rates down. And I think the way to do that is to start with a good deficit reduction program. We've been pedal to the metal fiscal. The Fed has been pedal to the metal rates. So if you were to stop the big fiscal deficits, then the Fed could actually go into a proper easing cycle.